Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in company filings. Today we're diving into a document that might sound a bit dry, but it has got some crucial financial moves happening behind the scenes. Alright, so this is a current report, meaning something important just happened. It is from Lord Abbett Private Credit Fund, and the date that caught our eye is the 18th of November 2025. What went down on that day? Let's find out. Before we get too deep, if you love getting straight to the point on these corporate documents, make sure you hit that subscribe button. And if you want to connect with other finance enthusiasts and get even more exclusive insights, join our Discord community. The link is in the description below. The big news here is about an update to a credit agreement. Think of a credit agreement like a loan contract. This is the second amendment, meaning they've gone back to this loan contract for the second time to make some changes. This is between Lord Abbett PCF Financing LLC, which is basically a special company set up by Lord Abbett Private Credit Fund just to handle finances, and several lenders, with Bank of America, Nating as the main bank handling everything. Now this is the core of the financial story here. The maximum amount of money they can borrow under this agreement has been increased. It went up from a hefty $400 million to an even heftier $450 million. So, Lord Abbett Private Credit Fund, through its financing arm, has secured access to an additional $50 million in borrowing power. Why is this important? It signals a few things. It could mean they're expecting to make more investments, or they need more capital to support existing operations, or even to refinance other debts. This increase suggests a growing need for funds, which can be a sign of expansion or new strategic initiatives. While this report doesn't get into the nitty-gritty of the financial statements themselves, this amendment is a direct financial obligation. Essentially, it is a promise to pay back more money than before. This is a creation of a new, larger debt obligation. For a company that deals in private credit, which means lending money to businesses, having access to more capital through credit lines like this is absolutely vital. It's like a store owner getting a bigger line of credit from the bank to buy more inventory they're planning to sell more. The report is signed by Salvatore Donna, who is the Chief Financial Officer. That tells us this is a significant financial move handled at the highest levels of the company. It has been reviewed and approved by the person responsible for the company's financial health. So, what is the story here? Lord Abbett Private Credit Fund, through its financing subsidiary, just significantly expanded its borrowing capacity. They are telling the market and their lenders that they anticipate needing or wanting to deploy a larger pool of capital. In the world of private credit, this is a positive signal of ambition and potential growth. It means they are ready to lend more money, which is their core business. This could lead to them acquiring more loans, investing in more companies, or taking on larger deals. However, with great borrowing power comes great responsibility. This also means a larger debt burden if and when that money is drawn down. Investors will want to see how effectively this increased capital is deployed and if it generates the expected returns. The key will be the quality of the loans and investments made with this extra cash. Are they backing solid companies with good prospects, or are they taking on more risk? As always, the devil is in the details, and the quality of the underlying investments will determine the ultimate success of this move. Now, looking at this filing in a broader sense, what does it tell us about Lord Abbett Private Credit Fund? This action of increasing their credit facility suggests confidence in their growth strategy and the market opportunities they see. They are positioning themselves to be a more significant player in the private credit space. The risk here is always about careful underwriting, making sure the loans they issue are sound. If the market for private credit continues to be strong, and they continue to make sound lending decisions, this additional capital could fuel significant growth and profitability for the fund. Alright, that is our breakdown of this filing. What is your take on this increased borrowing capacity for Lord Abbett Private Credit Fund? Do you see it as a sign of strength and expansion, or a potential red flag for increased debt? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description to join the conversation. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.